personally, a plan B, well, it's sort of my plan A, is accumulating precious metals. And what we're seeing is small investors are no longer buying that much; they're selling, and it just kills me when somebody locks in, a loss. And this is a point. Small investors tend to buy and sell at the wrong times. They buy at peaks, and they expect something to go up right away, and they're impatient, and then they sell at a bottom. And with all of the geopolitical risk that is happening right now, the potential for war, and the price of gold and silver being down over the last 5 years, this is the point where you want to buy low and then wait for it to put in a peak and sell then. And I know that the 2011 peak was not the peak. That wasn't the blow off top. Silver peaked in April and gold didn't peak until August, September. And that isn't the way a precious metals bull market ends. A panic-driven, a fear-driven blow-off top in precious metals, when people are running from other asset classes and other currencies into real money, gold and silver, they peak at the same time, like they did in 1980. So what is your take on what is happening, generally with all the global turmoil and people getting suckered into the top of this bull market in stocks?
Yeah, we touched on this in before the interview,
yeah.
And I think the interesting thing is this: most people get into precious metals, and they don't connect the dots. And the reason why I got into the precious metals early on was because of reading Ted Butler and looking at how silver was going to be consumed so much by industry. It was going to be another rhodium. There was just not going to be enough silver to go around. There was going to be too much demand from industry as well as too much investment demand, and that was going to cause the price of it to really skyrocket. That was the reason I started to get into silver. And as time went on, I became to understand it as a store of value. And now, since 2008-9, I understood the energy connection. So a lot of my readers, a lot of the discussion out there is a manipulation of the markets, or let's say market intervention. Well, they could continue doing this forever. Theoretically, if they've been doing it for a long time, we've been on a fiat monetary system ever since 1971. It's been getting close to 50 years. We could do it another 50. However, I look at it as the energy, and the energy is the driving force that is the real reason to own the precious metals. What's happening in the energy. Now, when Trump got elected, I saw we had a huge move up that day, and then it's been going down. It's been kind of, the markets are going up and up and up, but the precious metal sentiment and sales have been going down. And you're right, this is the exact opposite of what really should be taking place. And so it's not only precious metal sales that have declined, sentiment, it's also survival goods. People are no longer worrying about a huge collapse with Obama being the president. Gun sales, ammo sales, they all have kind of moved together. But I think this is not the time to actually, this is not the time to sell precious metals. This is a time to accumulate them, because I look at it as an ongoing trend. And the ongoing trend says to me, the energy situation, we're in big trouble with energy. We're in really serious trouble. And the way I look at it, I look at the U.S. energy industry to disintegrate within the next 5 to 10 years, the oil industry, and even the global oil industry. So when that happens, what's keeping the value of stocks, bonds, and real estate up is debt as well as energy. And so when the energy system starts to fall apart, Mike, so does the value of the stocks, bonds, and real estate, because we know their net present value, they're based upon future earnings. Well, when the energy becomes problematic, so do the valuations of stocks, bonds, and real estate. And so now I think what we're seeing here, we're seeing a huge move in these because, like you said, there's not. It's like there's more withdrawals coming now. Baby boomers are retiring, and the only thing to do is to inflate the system where 99% of the investors who are invested, they're invested in this market. They're either in stocks, bonds, or real estate. That's where they're trying to keep this bubble going, because when it bursts, Mike, the whole thing falls apart. And when the thing falls apart, real estate prices fall. That means real estate taxes fall. The whole thing implodes on itself. So this is also the reason why I think Trump has flip-flopped. I think he was a little naive. He was going to do all these things, but some top mind said, "Listen, you start poking all these things, the whole system is going to disintegrate." And I'll conclude by saying this: I do disagree with Peter Schiff that if we let the banks collapse and we start over again, that we can have a new gold-backed system. I don't see it that way, because we don't have profitable energy to do it anymore. We're not going to grow back out of this, and so I differ that way. But I still believe the precious metals will be the best options to own in the future as this system starts to disintegrate, because you don't want to be in stocks, bonds, or real estate.
Yeah, Robert Kiyosaki used to talk about the 5 Gs, that in a crisis, what you want is ground, meaning real estate, grub, gas, guns, and gold. And, so that's some emergency food, some way of protecting yourself, some fuel, some real estate, and gold. And I believe we're getting to that point. I think that, a long time ago, Dan Rubach said that the 2008 crisis was just a speed bump on the way to the main event, and I sort of hijacked that term from him. Dan's my producer, director, and I really do believe that you said that they can manipulate forever. All manipulations cause energy to build up. The Fed has manipulated the economy, and it warped the economy, and it's going to make the next crash bad. If they were 100% effective at manipulating the price of silver, it would still be $4 an ounce. It'd be back where it was in the late 90s, 2000, they're sort of doing a managed retreat and then manipulate more, and a managed retreat and manipulate more. But the manipulation causes opportunity. You can buy silver at an artificially suppressed price because of the manipulation. If the free market was working perfectly in the case of silver, it would already be over $50 an ounce. I mean, you were talking about the debt is 23 times higher, and the stock markets are 23 times higher. What an amazing coincidence. But what was the price of gold in 1980, and what was the price of silver, and how many times are they up? Silver hit $50, and it's way below its 1980 price. Gold was $850, and it's just barely above its 1980 price. And when I look around, I don't see very many things that are undervalued at this time, except for the precious metals. But I absolutely agree with you. The net cost of energy is rising. People don't realize that to get a barrel of oil out of the ground, you got to spend quite a bit of energy to pump it up, transport it, refine it, and then put it into your gas tank.
No, that's correct. And here's a very interesting fact. And I get my information on the energy return on investment, how much energy you put in and how much energy you get out. It's not really it's not dollars, it's energy. And I get my information from several scientists. Charles Hall is one of them, Cutler Cleveland, David Murphy. There's about a half a dozen of them. And they did a very interesting paper on the energy return on investment of U.S. oil. And here's what's fascinating. In 1920, Mike, the oil industry was finding 1,200 barrels of oil for every barrel of oil energy that they put in. That's 1,200 to 1. Well, the last time they did the estimate, which was several years ago, about 5 years ago, It was 5-1.
Wow.
And so it's the decline, and that's just finding the oil. It's even worse now because this last year in 2016, the world burned 29 billion barrels of oil. We replaced 2.9 billion. That's 10%. So we're not replacing the oil, and now the energy companies are in such big trouble. Let me say this, and I have another point I want to get to. The energy companies are in such big trouble now that they're lowering their capital expenditures. And so when you lower your capital expenditures, that means you're not investing more in the future. And ExxonMobil, since 2005, has spent about $220 billion purchasing their stock back. And they spent $240 billion in capital expenditures. Why didn't they spend $220 billion on finding more oil or getting more oil to produce? I think they realized early on the easy to get to, the inexpensive, the profitable oil reserves are gone. So now the difference today, where we're at today, than we were in 2008, the market economics are in bad shape. We know the housing market is topping, and the automobile industry is it's more insane than it was in 2008. But the energy industry wasn't in bad shape in 2008. They were making money in 2008. They're not making the money now. They're barely making money this quarter, barely making money, but they've got a lot of debt. So, Mike, the problem is not only are the economic indicators, the real economic indicators, are becoming really in bubble territory. The system that runs everything is in much worse shape than it was in 2008. So while the Fed can print money, they can't print barrels of oil. And this is the reason why the market intervention, the market manipulation will end, because you can't print oil. Oil runs the system. So when the system falls apart, that's when you hold onto your gold and silver assets, physical gold and silver assets. To me, those are the key assets to own. Of course, when I talk about real estate, Mike, I'm not talking about owning a home or, let's say, a homestead or land. I'm talking about highly, let's say, investable real estate, commercial real estate, warehouse real estate, et cetera. That kind of real estate is going to be in big trouble.